Welcome back to Small Caps. My name is Kerry Stevenson. I brought Francis Hunt, the market sniper, back to chat with you all today because the reaction when I spoke to Francis in mid-July of this year was that please bring him back quickly. Lots and lots of positive comments. Francis, just about the way that you see what we're going through at the moment and the seismic shift and why people need to be very aware of what's going on. And I think you said last time that your passion is to make sure that people don't get sucked into the mire of what's going on. So to start, if we could this time, I think you said last time that inflation is a monster that you best kill small, but unfortunately the inflation genie is out of the bottle. Do you think they're being honest with us about inflation, and how should people be working within this, what's going on?
No, it's not. It's not the guise of government, dark states, and anybody, to be honest. They tell you what they need to tell you to manage you, not to impart truths to you. So inherently, the inflation genie is deeply out of the bottle, and it's not one that goes away once it's a strapping young adult. You just don't fight it very well. And we've had experience with this before. And although I will say, never before at this level of indebtedness either. So many people do, I almost tire of it. Oh, it's the 70s again and all of that. It's nothing like the 70s. We're far worse. There's much more debt, but there are some aspects that have a similar ring. Okay, we can grant that, but people tend to want to cling to an associated historical reference. Everything is unique. You're not the same man when you stand in the river. It's not the same cells. It's not the same water particles, but you are standing in a river at roughly the same place you did when you were a child. But inherently, this is deeply out of control. We know there's concepts of shrinkflation. We know retailers are using that to not pass on the fullness of the cost losses. We know government statistics overweight certain things. You only have to look at the American shadow stats to see that in actual fact, inflation is well deep in the teens in America, whilst being represented at being just under 10%, because it's kind of psychological number. UK popped 10.1 and they allowed it to happen, and they were getting beaten up as the worst. But you're actually seeing the Germans lock in 10 times the cost on futures for energies in Europe. So how on earth does, and I mean, the biggest failing, rule number one for governments is maintain a steady, reliable, fixed price supply of energy for an economy to function. And you have to ask, how have they been fulfilling on that? And they've utterly been failing. All of Europe is failing on that. The UK has failed on that. Their policies have helped done that, on top of the central banking cartel and the proliferation. Everything you could do to stimulate a roaring fire, pour petrol on it, gasoline, get the wind blowing, they have done. This is a beast of a fire. It is, and many will go, well, it's incompetence. It's not incompetence at all. For me, it's too paradoxical to do so many genius things to absolutely destroy an old mule when you want everybody to get off this old iron horse railway track and onto your new monorail system of surveillance finance. It's a takedown. In my opinion, you are watching a takedown of the legacy financial system. And it's actually a tribute to how stable and how strong it is that it's taking so much to actually break it. So much foolhardiness, dressed as foolhardiness, as again, I put it down as intent. That will make me a conspiracy nut to some people, and I'm okay with that. But you don't get to be that stupid without having real genius behind you. So, I mean, you bifurcated the supply chain with one of the biggest energy providers for Europe. You couldn't do it better. You couldn't do it better. It points to orchestration in my worldview, but I could be wrong. So yes, it's a runaway train. And the big point out of that, so many people are saying that. So what, Francis? Now I'm sounding like other people. We said this, we believe first, but nonetheless, what does it mean for you in terms of your investing and behaving?
Exactly.
We are doing the anti-metaverse economy. This is not the time for virtual reality goggles and having Game Boy meetups with some mate who's a Korean in the other part of the planet. This is about physical things. this is actually the point where we were discussing a little bit before, the Maslow's hierarchy of needs that I was highlighting, and why I think that's so important. And actually what I've been doing with regards to that is I've pulled up an image for people to have a little look-see at that. In fact, this is it here. And I started talking about this on another program, and I forget that
I can't see it yet, Francis. I think you need to share screen if you're going to bring up the image.
Absolutely. Let me jump on with the share. That's me in my little old world bubble, charging ahead. So let's get the share screen up, shall we?
Because some people might not know what it is.
Indeed, indeed. My assumption is that we've been introduced to this because I've done all the stupid education. I did an MBA and everything else, and it's typical psychology, physiology, and high-level economics, or not even high-level economics, but physiological needs are air, water, food, shelter. I would argue energy is in there, sleep, clothing, and some degree of reproduction. So the ability to be able to keep warm, be fed, and be covered. Safety needs is like personal security, having some income, so employment, some access to some resource, reasonable health access. So at least at a base, if you're sick, that doesn't mean you're proactively in the longevity space. But if you get sick, you have access to someone who can medicate some degree, and some element of property from maybe a rental point, and then maybe starting to get into ownership. And then love and belonging. So this is a pyramid. And when you get into the more virtual realities and being able to do various things in the digital space, a lot of that comes in the STEAM space. Status, recognition, fast cars, big houses, those sorts of things, looking high net worth or something like that so that you feel proud. And then the self-actualization, you would describe Mandela and Gandhi and Martin Luther King as people who did things for others. So that's almost a spiritual advancement point. So that pyramid is heading on up. And I make reference to it regularly because much more in my worldview, people are going to need to start focusing out of here and back down into there and there. Layers 1 and 2. We're going to really get taken down where you're not worrying about whether you can buy the new Rolex or that. You're more interested in securing a steady supply of basic needs: energy, water, power, a supermarket empty, etc., etc. So a lot of the things that go down, and this is this inflation, this hyperinflation. I called it hyper stagflation. I coined my own phrase on it because it's going to be recessional. We expect asset classes to be smashed. This is how you level the bourgeois. There was during the Bolshevik Revolution. Actually, the biggest war was not on the poorest of peasants. That they were weaponized against the farmers, the people that did provide, consumed less than they provided, and were moderately wealthy. And that was the culling of that class, and also the religious, the Orthodox religious. They were tortured during the Bolshevik Revolution. So inherent the breaking up of family values, the breaking up of, church and an order. I won't always say church has been great. They were a control structure of their own, certainly. But in terms of the Bolshevik Revolution, they took the people off the land. And in fact, it led to a large amount of people starving. And Trotsky's famous phrase of, when the mothers eat their baby, then come and tell me they are hungry.
Wow.
Which is a puritanical, absolutely satanic statement that could only be made by a psychopath, who was later killed by another psychopath who was all part of their cartel, Stalin. So that in essence is a little mini flashby of history. Now, those people during that Bolshevik Revolution were entirely focused on survival, personal security, avoiding the marches that came to burn farms, and retaining some wealth in terms of, my apologies, just seeing often not wealth, seeing after basic needs, food, shelter, and they were being thrown off the land, and they were, caravans of poverty, people roaming and scouring the land and eating earthworms, literally. So, I mean, it's quite a tragic story. And I think so many people could be far better served to read a little bit of that history, because that was a toppling down, the Maslow hierarchy of needs. That was your Russian Revolution. And they were far better off under the Tsar. And the notion that the Tsar was universally unpopular is not true. There was the White Russians and the Red Russians, and the White Russians were actually pro the system, and we're resisting. And the Red Russians were largely infiltrators from Georgia and the old Khazarian lands. Anyway, too much history maybe for people's liking, but the whole concept of this is that we have economies such as Britain, based around London, is essentially highly, lawyers and investment banks doing derivative contracts and being paid, having base salaries of £250,000 and bonuses of £1 million. This is how we value GDP and services as high value at an end of financial system. And then I dressed up like my Boer friends in South Africa. You're a farmer nation here, and you have a fair amount of that too in Australia. You have unbelievably scaled farms there, and you pull things out the ground, useful things like gold and other minerals, which used to be the case here and still is to some degree. And I argue that the quality and standard of life in South Africa, Australia, and New Zealand, for example, because I know that's your core base, those currencies may actually do relatively better than what I see coming for Britain, Europe, and the Asian highly financially leveraged economies, such as Japan, Korea. So if you refer back to the chat we had last time, what did I tell everybody they should do? I said, look, you may be interested in small caps, but that's like deciding, do I buy an apartment here or I buy an apartment there? And index trackers are like a house and all of this. And my argument is none of that matters. The earthquake is coming. The ground under whatever you're thinking of buying is moving, and it won't matter if it's an apartment, a house, or a 30 unit block. Because you're a high net worth guy, it's all going to fall down on account of tectonic plates underneath you shifting. And that is the macro. And the macro starts in the debt and the FX markets. And actually, you can build wealth during this period. So also some people say, my message is very miserable message. No, it's an opportunity. You can't have the scale of crisis and end of system that we're having and not throw up immense amount of opportunities, providing you understand the nature of the game. So if you revert to the first time we spoke, I said dollar dominance, and it's going to go on longer and harder. And they're going to stay with the inflation fighting theme because they let it get out the bag. It's too big a monster. You just don't kill this wild boar with the first shot. You've got to keep on stabbing, and it's a lot of pain, and he horns you a couple of times, and you get properly beaten the hell up because he's a pissed off male, fully grown, and he's fighting for his goddamn life. That's the monster. And this is how inflation plays now. You didn't get him when he was little. And so this keeps thinking peak inflation call, a little bit of a recessional feel, downturn, people stop buying, a little bit of a sell-off in the oil price. But actually, if you look at the oil price, even though it's come off, the dollar itself has gone up a lot. So, if you're sitting in British pounds in the UK, filling up your Land Rover, Range Rover, you're paying even more because the pound has slipped, even though the oil itself at the top level has come down. It's priced in dollars that have gone up further against your currency. And the same for the euro. When we first called the euro short, it was 1.18, 118. To the pound. We said you're having a parity run and you're going to run through 0.85 and below. And what's happened? The parity run has occurred. So most of our forecasts are being endorsed. We're not trying to be sounding too clever. We get a lot of things wrong. But I do think on this macro series and the times for now, this is the great time. We had that reset sniper circle in our brand from the beginning. These people are killing a system. It has to be worse than the last time. Central bankers do not introduce stability. They introduce instability and volatility. It's quite clear that all their actions of no pain have increased and built up a much bigger toxicity. If you have a hangover, it's your body's warning system not to continue. That you don't feel like another tequila in the morning after 10 the night before. And that's there to preserve you. You're going to push yourself over the edge and you need a detox. And it forces you into burning out the brushwood so that the grass can grow greener underneath. We've never had that. You don't have the pain, so you keep smashing the tequilas. And now you look like a 72-year-old man and you're only 25 because you've just been nonstop on the good stuff. And this is, in essence, the nature of our financial system. So the worst hit nations are going to be Britain, Northern Europe, particularly Europe generally, and the Asia. And so if you look at what we said on the currencies, I've made a case that the biggest blow-off will probably of a significant currency will be the Korean won, but of the majors, it's the yen. Because the Korean one's probably not quite a major yet. for most people. Some people find it hard. So if I go over to the charts, we said, you had a beautiful HVF. This is our trading strategy that brought in the first Asian crisis. Let me just rescale that so you can see the annotations. This is a monthly chart of the dollar versus the Korean won. That was your 97, 98 Asian crisis. And what we're calling is a dollar dominance period, which will bring both an Asian crisis, but also a pan-European, which will include Britain. And since we last spoke, this is what's going on. When you see a chart doing that on a monthly time frame, I'll drop it down to the daily. Just running.
Okay.
If you look at it, this is look at this. This is traded very stably, apart from a couple of spikes in this range. For decades. You're going back from 97 to 98. And we've been saying this is extremely significant. Everything else out here is tiny bit on the outlier side. You had a hyper overvaluation of the one. You had a hyper undervaluation of the one there. But you do a volume by price on that. This is your range. And we said this is when we spoke to you in July, we were around about here. We're saying this is a major breakout. This is how it's going for that currency. And we've said 2,366. We went on Real Vision and said a halvening of a major currency. This is not a Mickey Mouse country. This country brings you Samsung, Hyundai, Kia, and everything like that. And it's probably by IQ the smartest nation of the world by all measures. So, it's quite a statement to have made. And we're very much on track for that. And this ends in a super spike, much like it ended before. But it's not just about Korea, because this is the USD yen, which is the one we called. So let me bring that one up as well, is progressing equally robustly in its devaluation. This is an old nation now. They have 0.91, only worsened by Korea itself, who have 0.88 children per family. They just don't do kids. They sell more incontinence nappies than they sell nappies for infants. So, this tells you about the demographics. And then they are the most officially indebted. I would argue, actually, America is probably in terms of unfunded liabilities. This is a runaway train. When you say do what? This is why I've sat here in front of you and said, your crypto market has come to a far more liquid place. It's called the Forex market. Look at that move, Kerry. You were in 1st of January, 21. That was not that long ago. You're at 102. Today, you're at 144. Two major nations, Toyota, goodness, Panasonic, you name it. This is a major nation. You have every single one of us has their brands in our house somewhere, all over the place. And you are seeing a 40% plus, 102 to 144. We called that move. Technically, not because we're smart, we just say dumb things because we see things on the charts and we say that doesn't resolve well for the Japanese yen. And we've run our 140 target. We had our rest. It's about the only time we had a red candle. You had a red candle in there and a tiny one in there. The rest of the time, on a monthly time frame, you're sitting in something that's done that. We call that a line of efficiency. We have a lot of phraseology. It's how steep do you go in how little time, because there's a carry cost often to a trade. Only in the case of the yen, their rates are lower than the dollar. There's very low carry cost to this. In fact, if you didn't have to deal with a broker and you did it manually, you get paid more interest in an American account on $1 million there and being short than you would have on a short $1 million loan in a Japanese, I'd imagine. But anyway, that part aside, this is very low. It's not like trading the Turkish lira where we all can assume that goes to some crazy number, but there's such an expensive carry cost. This line of efficiency is super steep in a super short time. On a monthly chart, you've got an isosceles triangles. For those that did their geometry and maths, that means a very, very steep angle. Actually, isosceles, I think that I might have cocked up that one. I think they probably have to be even angles over there. But nonetheless, my point is an immense amount of vertical on a very short base. That is what's happening in terms of that. Those are trades you want to be in. We are the high reward, low risk breakout traders. Fast moving breakouts. Get a lot of dough fast. Everybody's in the game to get rich quick, but nobody wants to trade macro. And here's the unique moment when macro is actually going to do that for you. And I've been shouting and I've been giving a lot of these trades for free. Of course, our community is in first. They've explained, they've got entries, they've got stops, they understand why, a lot more, so they have more confidence. But hey, We've given a lot away free, and it continues to run. So the Asian financialized, and they have a very interesting savings where they use derivatives to boost because of the low interest rates in Korea. These are a lot of dodgy leverage, too smart, too much leverage in both Korea and Japan. And then you have the Hong Kong dollar, which we've spoken. How long do you think that peg holds? Well, let's show you what's happening in China. China is worse than anybody is letting on. Don't forget, Australia got a light GFC light on account of China going from very low indebtedness to worse. That would make the bankers of New York, London, and Credit Suisse blush in terms of what they pulled in building and getting resources and building into the future. You know all about the empty cities. You know some of them having to be destroyed now because they've not met building standards. You know about them securing sites, selling off plan, and then taking that money to secure more sites and actually not getting very far in the build. They have hyper leveraged. The corruption is extreme. I'm surprised heads haven't rolled. They're the kind of country where they would do that. But you look at this Hong Kong dollar snapping right back and leaning up against this peg. So at some point that peg fails. Why do you bother to hold that? Well, let's have a look at the USD Chinese yuan. And you'll see how that has turned. Again, this is not our preferred trade, but it's going to be affected by this process. If you have a look at that, you can look at the weekly, how it's gone, a little drop a time frame a tiny bit. This has turned. This has turned very strong off the bottom. You had a falling wedge in here. This is typical technical analysis that we do in the community. Falling wedge into the lows, very low vol, nice little squeezy. I can actually reframe that a bit better. It's not the nicest visual for your guys. Let's go actually to a couple of days instead. And you can see this is your big neighbor that gave you heat when it was really cold in Europe for Australia, and saw you be able to muddle on a little longer with your housing boom. There you go. First mini fractal of a squeeze. Hyper over performance, first HVF in a new trend, another squeeze. There you go. Steep grind line, more and more people coming up under this trade. Melt up. This is dollar getting dominance over everybody else. And it's not because dollar is good. It's not because it represents value. It is a weapon. It's like the military industrial complex. It is just a geopolitical financial weapon as opposed to a bomber that drops shrapnel and kills in that fashion, population. So hacking is a weapon. Military industrial complex are weapons. Outspending people are weapons. And a currency that is still strongly proliferated, that most of this financial system is built on. They are tightening, so they're removing officially, and it does almost more damage than the interest rates that. So they're taking the juice out of the plant. So it's getting shriveled and dried, and it affects the rest of the world because they need dollars to still secure things, despite this bifurcation. So we're going to see the melt up in the dollar. That's the time when the BRICS actually release a central bank digital token and announce that it's based on gold. That's your point you bail out of dollar. And that's your point where you then should already have accumulated a massive amount of precious metals. And I know you want to talk about precious metals next. So jump in and give me a comment, and I'm going to pull up the gold silver ratio.
What I'd like to find out, I guess, is with all of this, do you see that the US dollar, you said stronger for longer for a little while yet, but at some point the BRICS are going to turn around and say, we don't need, is what you're saying is that there will be a number of countries that say, don't want the US dollar anymore, we're going to bypass it. Is that what you're saying?
So there's 3 stages to this, going from the old iron horse chuff train to the monorail.
Yep.
Full problem, a needed painful phase of full reaction, and then the introduction, which is their solution. So let's call it 3 stages, and I'm just going to say problem, reaction, solution. We are in the problem phase where the dollar bashes the rest of the world, and we are going to have to accelerate into that phase far longer. So the CBDC of the BRIC nation option as a possible scenario, we don't know the future, I'm guessing, but that's the surveillance finance they want us all to sign up for, no questions asked. How do you do that? You create a lot of pain. That's the reaction part. I'm not yet in any pain. I still have a business and I still have income. Once they've made everybody bankrupt, or ward of state in terms of financial, and the supermarket's empty, then I know we're in peak pain phase. At that point, you are stressed, you have low resistance, you'll sign anything the government's put in front of you. That will be your biometric.
Do you really think it's going to get to that level of chaos? And you know, when you're talking about the reaction is going to be, do you think it'll be that severe? It hasn't been severe in the past. Why now?
Because this is the moment we kill the old system. And to kill an old system, we're all deeply embedded in the system. It's almost like we all ticks on an old cow. They're going to come and shoot that damn thing. The blood's going to stop coming past for all the parasites on that animal. And that's when you got to hop. And that's when you're now no longer eating. You no longer got the shelter of its fur, etc., etc. Excuse that analogy, but truly it has to get that bad. Inertia is an incredibly powerful force.
Yes.
How do you create sufficient momentum to get people who don't want to move, who are deeply suspicious about the technology, surveillance, finance you're going to be ramming down their throats? How do you get them to accept something that the smartest of them all realize is not going to be good for them? You lock them out in the cold and starve them.
Yeah, fear.
You got to. You got to create something so horrible that they are forced to accept.
I want to find out.
And even those that riot, martial law, they want full control. They want totalitarianism. This is a Bolshevik communism that is technocratic and oligarchical. They want that. To get the martial law, they know some people will riot. They know some people will smash doors and throw things at government buildings, or maybe fire a handgun at a politician. So they'll say, we need martial law. They want you to give them the excuse for martial law. How do you bring in totalitarianism? Martial law. How do you do that? Well, you starve people, you piss them off, you start mumbling about how they've got to eat this new system that they all hate, and then they resist. Then you introduce martial law. You now have a license almost to shoot your own citizens. And then you create the pain so that they go, well, you don't want what we're offering? Have nothing. No food, no shelter, lots of crime, and we all stand down. And a lot of hungry people come around to your house. So you lose your security. So referring back to Maslow's hierarchy of needs, they challenge you on your most basis requirements that we've all taken for granted for years. Safety, personal security, employment. Your employers, all the banks go down, bank hacks, everything. You don't have a job. Nobody's got money. Nothing's worth anything. You pick up all the shares for nothing. That is how, in the casino, the house tips the entire table and everybody's chips skid to the banker sitting at the end side. And then he goes, thank you, thank you, thank you, thank you, thank you. He picks him up for peanuts.
Why has it got to this, Francis? Why have we got to this time in evolution?
Corrupts absolutely. Absolute power corrupts absolutely. Because you can, they will. And the surveillance finance tools now are so advanced. So here in South Africa, bank by face, I turn on the radio. Hey, guys, do you know somebody's identity is being stolen, minimum of 2 a day? You can now bank with a selfie. Oh, how nice. So you want the biometrics of my face, basically. Wow. On top of the fingerprint you're scraping on my phone, on top of everything else, so that you can absolutely geolocate me, know exactly where I am, and 100%. What if I don't want to be known by government as to where I am? Whatever happened to being, you know, a springbok in the bush? Somebody doesn't know exactly where he's pronking or what he's up to and where he's grazing. Now we all have to be tracked. And this is coming. This is coming, and it's all part of the bank, and it'll lead to real-time tax, real-time VAT, taken off income as it arrives. And when you see the decompounding effect of not even having a few days sitting on your money, it's taken immediately. And how many times have I done this? This was in the, you know, if you pay 30% tax and you double the dollar, you get to 22,000. If you just double the dollar for 20 years, you get to $1 million. That is the decompounding effect of paying 30% of everything you own at the end of a year. Imagine how that goes when you start dropping it to real time, that literally that hour it goes.
All right. So sorry to interrupt you, but can the beast be stopped? And if it can't be stopped, I'm feeling a little bit depressed at the moment, Francis. So I'd like to know what's, you know, what you said before was problem, reaction, solution. Can we have a bit of solution so I'm not so depressed?
Yes. Well, the solution in terms of what I said is their proposed solution. We've got to do a fork, like we no longer believe in Ethereum and we're Ethereum Classic. We want to go live life free, the classical way, the old school guys. So that's what our entire community is about. I'm looking at a site. It's got a lodge. It's got a number of freestanding homes. I want to be able to choose my neighbor. I have an entire community of people that would like to have somebody who thinks like me as a neighbor. I want to be water independent, power independent. So this is places with boreholes. This is places with rain catchment systems. This is places with solar all over the place and battery harvesting. We've had grid down here in South Africa. They did a load shedding for 2 hours yesterday. They're going to see exactly all about that in Germany and in the UK. So they would look down their nose on an existence in Southern Africa. They're going to have a winter of discontent. And it's not me wishing it on them. I'm not an aggressive. I've lived in the UK. My daughter's in the UK. I have family, friends. I don't want this to happen, but I'm just calling it exactly as we see it. And it's a winter of discontent. And some people say, oh, they don't have any problems. No, they're fine. Why did they pay 10 times on future gas supply?
Yeah,
the Nord Stream has been switched off. These people are going to get a cold winter, and there's going to be grannies freezing in their flats, and it's going to cause lots of anger. Then they're going to have to shut down some of industry so that grannies don't freeze down in their flats. That means Mercedes won't be running off, and then you'll have a contraction in the economy, and then this debt to GDP just goes ever higher because you're going to add an accelerated rate of new debt because you're going to print to do this.
Yep.
And you're going to have an economic contraction, and you're going to have a tax contribution reduction. So you're going to have every aspect of which is income contracting on you, and you're going to have to gap fill that with proliferation of fiat. And that's going to lead to an ever greater devaluation in that euro construct, which is going to bring the euro into a spiraling vortex. People think markets are inherently stable. What actually happens is they accelerate to the extreme. When you get these things, people will panic out of euros into Swiss francs, into dollars, and into gold, which, as I was starting to steer you, is actually hugely cheap on the discount window basis at nominal terms dollar, and is actually, in terms of the gold silver ratio, probably in the last 5 decades at one of the 3 cheapest points that it's ever been. So it is truly, and I know you recognize the value. So if you're okay with Matt, I'll pivot to the gold silver ratio discussion.
Yeah, this is a great slide.
Yes, it's got a lot of detail on it, and I'll try eliminate one aspect there. We've somehow picked up a legacy gold price in there, and just remove that. So what are we looking at? I'll just turn the eye off first so that I don't overstress people initially and then add the detail back in a minute. So I've taken the silver futures, the gold futures, and divided it by the silver futures to get the longest period of gold silver ratio that we can get easily off TradingView. There are some other people with great data backlogs that will extend and be able to do more. But this is our modern era from 76. Here was the 80s high of gold and silver. So if I have gold over here and we look at 79.80, you will see there was your $880, 1st of Jan 80. So we're on a monthly chart here to get all this history in. We're on a monthly. So if I go back to the gold silver ratio, you'll see that we're at a 16.5. We ran up to 102. That was peak financialization, peak dot-com boom mania starting, and we ground slowly. This was very controlled, and then you had a bit of a spill here, then we ground again, and we eventually in 2011 got to another bull market high, but this was truncated. It drifted. It was never allowed to capitulate the other way. So this is why I call this entire 2008, 2011 bull market. It was a truncated bull, and it lacked the extremity. As far as you overgo to, and this is 90, by the way, the red line. So anytime you're above 90, it's an absolute screaming buy, precious metals, particularly silver. Anytime you're below 30, anytime you're below 30, you might want to pivot out of some silver into either gold or land or other assets. So that was a great time. Gold was 880 and silver was whatever it was at the time. We can check it, but it was only 1/16th of the gold price. At the moment, we're up at 96. this was a decent point to parry. We hit $50 on silver, and gold was 19.27. That was around 30.5. We never quite touched the 30, but we came close. But it was a truncated bull. You could have had the expectation it would go further. The degree to which you overshoot will be the same degree typically that you will undershoot. The largest overshoot that ever happened in history was with the pandemic, 6 or 7 trillion. All that money went into ARK and tech stocks and low interest rate only growth stocks, low interest rate environment stocks, that's stocks that flourish in low interest rate environments, because we're at peak depression, and all that cash chased into Apple, Facebook, Snapchat, a lot of them. And then 126. And precious metals was as out of fashion as you could possibly be. Down, 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 down. We've had our first stab down. We're having a refinancialization spell, and we're at 96. My opinion is that's an excellent point to be pivoting into silver particularly, but gold as well. Because you want to have some portability. You want to have it outside your country, but physically held ideally. People should pursue the 5 flag solution. So our reset is growing immensely. More and more people are seeing what we've seen. You know, people used to say, don't talk about that other stuff. You scare me. It's horrible. There's opportunity in everything. Yeah. If you come out, this is a big obstacle course people are getting forced to run. We've had an easy time. If you prepare for it properly and you run it, you could almost enjoy it. Although there'll be a lot of people suffering, it'll make it hard. But if you prepare properly, and we've never finished preparing, we're all underprepared in so many other ways. You've got to think of every scenario, how much money you've got in banks, how many bank accounts you have in different parts of the world. Bank hacks, very probably on, particularly Western banks. This is going to be a major culling of wealth. Kill the Burgoy. So you take their money away from them, then you control them by food. Supermarket empty, things like that. You've already had little mini flashes of that, hoard buying and not enough toilet rolls, you know, the white gold running out as well. Now you will get the full version thereof. So if we have a look at that, 30.5, since then, rising wedge, pop out the top to an extreme high, and then that initial reaction. This is a retracing move, but the longer term should be down, and I actually think so much is the globe financially engineered. This is a chapter ending for this economic history. You will go lower in my guesstimation, if I'm guessing, than even the 80s boom on silver, and significantly lower than the 2011 highs on the ratio. So I actually think single digits are possible. So that's why I say gold silver ratio less than 9.99. Don't forget, you talk to Keith Neernaber and the rest of the guys, they will tell you of talking about First Majestics. I think I got his surname wrong.
Silver. Yeah.
Yeah, he tells you he gets 8 ounces of silver for every ounce of gold he pulls. And in some senses, many people are saying there's less above ground stock on silver. So silver is the screaming buy at these levels. They literally are running a price window. And what's happening? China is accumulating and is the biggest miner. Russia has been accumulating. You can see the foreplay for some physical relationship. So think about this. We have an over-engineered fiat system. They want to sell you a new system that's crashed. They have to pretend they're going to get rid of all the old corruption they introduced by the fiat system. That's the post-1971 proliferate, free float, everybody proliferates, and the currencies will see it and balance out. So they will refer back to gold, and they will have some element of gold in this. I don't think you get a gold full standard, but what you'll get is oil, gold, some fixed element. This is to move, and Kissinger said the wealth is moving from west to east, and he's an orchestrator of note. I would pay attention. So you're going to have Russia having an oil, gold, metals, or maybe even uranium. You could have a lot of things in there that are physical, into a central bank digital token as a backing to reinstate people's acceptance and confidence of more stoic and less proliferate policies than the hyper financial engineering that was pursued by the dollar. They will later drop some of that, as all societies do. But initially, they're going to try be honorable. They're going to try put a bit of carrot, not just stick as well. and there will be this competition. And then everyone pivots away from dollar. And that's the point where the dollar. So I'm not a dollar bull in the sense that fundamentally I appreciate it. I just say the price behavior of how it fails is it first spikes. So you can benefit from that period. But if you aren't simultaneously taking your profits out of brokers, because I think we're going to have counterparty risk, I think brokers are going to go bust. I think I've mentioned this just recently. There are industries that won't be needed anymore. Retail banking for man in the street. I think you'll either lose it entirely or have a greatly reduced retail banking concept once central bank digital tokens are gone. Discount airlines, another one. You know, they don't want peasants to travel. Watermelon communism is here. You're spoiling the biosphere in, you know, the up top there. It's only going to be expensive. It's literally going to be business class and private jet only.
Wow, really?
So I think there's a lot of industries that properly going to get a hard landing and may not exist anymore. So freedom of movement, your ability to be able to go anywhere on this planet at quite a reasonable price. No, you're killing the planet. So there's this new green awareness and equitable system. It's time for us to think, you know, these pontifying forces are going to be there at a great level. Plus, you may have there's been an escalation, and this isn't being overpressed through mainstream media, and I don't watch a lot of it, so I wouldn't perfectly know, but there's been a major escalation between Taiwan and China. So there was a drone shot down. After repeatedly buzzing into their airspace, they got them to react. That is, keep intimidating until you force a reaction, and then now saber rattle, beat your chest. So you could have the Russia-Ukraine situation being echoed on a China-Taiwan situation, which will now further drive those two together and further make not just Russia bad, but now China very bad too. And you could then have America try do what they did to Russia in terms of dollar or treasury holdings and forfeit that. And that's a thing, you know, you don't own those treasuries anymore, you know, and they've got $1 trillion of those treasuries. Well, they'll be buying the gold, and America's been holding the gold window open during the discount window open this time. And that's why if you look at the gold price on the New York session, it goes like that. If you just plot the gold price, and then if you look at the Asian session, it's an absolute parabola, hockey stick. And then you end up with the aggregation of the two is the gold price we're actually getting, the paper price. So why is that? So they're being prepaid for having treasuries written off. That's why they're not adding to them. They can't dump them because they'd crash the market, but there's a discount window. And I think this is an orchestrated, in my opinion, system. And they're just pivoting now to the communist half of the world, China, biometrics, social scores, facial recognition, cameras, you name it. It's not a positive, but you can, if you make a lot of money can buy you a lot of freedom, and there's real wealth building opportunities. You don't smash a system like this. And remember, they're going to lie. They're never going to admit it to you, but they are breaking this system intentionally, this old system. They are literally pulling the railways up so that train careers off into the dirt. Okay, and you can benefit from that.
So Francis, let's try and wrap it up for me to our audience out there that's scratching their heads and thinking, all right, I understand that there's a change happening. How do I stay in the right lane, and what should I be doing right now?
So there's people that are prepared to trade, and there's people who are not. They're just everyday people and never traded and don't want to do it. Crypto, unfortunately, you asked me to mention something on that, and I haven't done yet. I've been a net short, and it's been stumping up oodles of cash. In this mega depression, there's going to be a flight to turn anything that's liquid into cash. This is going to be a run for the money.
Bitcoin's done.
That done, I don't say it necessarily absolutely ends. I just say unless it complies to a full surveillance state level token, like the central bank digital tokens that will be issued, it will not be allowed as competition money. Okay. So it will become a very marginalized, low volume potential thing, or it will comply and actually have a lot of the features of the central bank digital token, and there'll be a mechanism for it. I think I wouldn't want to be Michael Saylor that bets his whole company on this. and there's an average purchase point at about 32K, because I can see, I highlighted a chart. I don't know if you've got still time for this, but this was a very interesting chart. And I got, in fact, I might have, let me just move this. I have it on a drawer here. And this is a sad fact. This is ARK. The candlestick is
yes.
ARK. So in my opinion, ARK is a currently failing, highly speculative, high beta tech ETF. And the gold line is Bitcoin. Now, you could do this with other tech things as well. It's not just ARK, but I'm kind of riling the maxis a little bit because they can be a bit too indignant sometimes for my taste. Here's the March 2020. Who moved first? This green line is ARK moving first. So Bitcoin lags. You see the gold line, Bitcoin slower out the gates.
Yep.
Once it gets going, this is almost like a gold-silver relationship, by the way, where ARK is gold and Bitcoin is silver. And they're going to hate me for saying that. But once it gets going, then the high beta element of Bitcoin kicks in. You can see the localized highs are occurring before on the tech proxy, which I've chosen to use ARK on. You can see the localized lows are occurring before. So my statement is, Cathie Wood's failing ETF, which has had record withdrawals, by the way, last month, is a low beta leading proxy for Bitcoin. This was already diverging to the downside. It was making a lower high and a lower low. Bitcoin still made a marginally higher high here. Then it had to play catch up. Look how it threw down relative to ARK. Then a small pause. It had a pause as well. Look at these rally highs.
Yeah.
It had a pause there. ARK had a pause there. It isn't much lower. Bitcoin overshoot, major down leg. This is just winding up a little bit more for its next leg down. You're looking at a leading indicator for Bitcoin. All the joy and all the chest beating about what a pristine collateral, XYZ, it is digitized money that is tracked, traceable, and the scarcity, all of this. I'm sorry, the way the market is treating it since March 2020, Bitcoin is a lagging high beta proxy for a failing tech ETF. And boy, do the guys hate me saying that, because it smashes so many dreams. And this is what's being shown currently. So what this actually means is, in this economic environment, this is definitely not an asset. If you won't go and buy the ARK ETF, why the hell are you rushing into Bitcoin? Because it is outperforming to the downside a failing ETF that has had record withdrawals. So think how many people are exiting Bitcoin to have the similar narrative of record withdrawals that goes with an ARK ETF that is going down less. This is technical proof, and it is lagging. It's not a boss. It's the God market of crypto, but it can't even be a boss over a failing ETF that's in a lot of high risk rated proxies. This should be a cold shower for people, because this is the facts of how it is. You know, if you put me on a show with Michael Saylor, which you're unlikely to do, I would say, Michael, I partied with a girl. She was sexy. I had my way with her, all ends up. But you married her, bud, and she's in a wheelchair now. And she's got a virus, and I don't know how much longer she's going to live. And you're pushing a heavy weight about everywhere you go. That's the truth of where Bitcoin in its current performance since March 2020 is. And that's a safe, I called it, I'm nervous when I make easy money in the markets. I think I'm missing something. Shorting this crypto market has felt too much like easy money. It almost makes me nervous. I'm like, is there a spike suddenly coming? But if I look at that ARK chart, and you won't be able to see it, it's so flat relative to the beta. But if I go and get it up for you just on its own without the reframing of the Bitcoin chart, there's no way I would be a buyer of that underlying at all, not for all the tea in China. So if I'll pull it up for your interest, because that is setting up downside continuation. We are still in the problem phase where the problem escalates into a blow-off point of pain for most people. And most people are longs. Long live the shorts. The big short was the big story of 2008 GFC. I'm saying it's going to be bigger than the 2008 GFC. It's going to make the big short look like the little pippy short. The big short's coming now. This is the super big short. And I'm sitting mostly short risk on assets. And I'm worried that I'm getting overconfident about the easy stumping up of money and shorting the crypto markets. And you should be turning that profit into physically held metals, because you're at the third highest point. If we go a little bit higher than 102, you'll be at the second highest point, barring a 7 trillion print for the COVID bailouts, which didn't hold for long. And you're continuing to see reduced supply. Everyone's buying solar panels here. Everybody's buying solar panels. What's in solar panels? Silver. The physical use. They paid me a huge amount for my old device, which was still fairly current when I upgraded myself to my new prisoner tag device. They paid me 10,000 Rand for the damn thing. For what? Most of it's going to be the metals. Most of it's going to be the metals, and maybe, I don't know if you can recoup chips. It's an older chip. I don't know how much you can do. It must be the silver. I don't know. I haven't researched it, but this is the big story. So, I mean, there's a real cold shower for crypto guys in there. And let me say, on the US equities, it doesn't change. We made targets on Head and Shoulders that we called previously on our YouTube channel. You had rallies right back up to the neckline, and now we're starting to roll over. The first major bull rally. Rallies in bear markets can be very violent, and this was a violent one. I still have my puts. They went deeply in the money and deeply back out. I still have them, and I'm still holding them. I'm going to hold and hold because the pain is still to come. This is still early doors. I'll go to the SPY for you as well, just so that you can see this. Look at that. This is a financial engineering economy that's coming to a close. Some of these businesses are borrowing to pay dividends.
Yeah.
This is financial engineering. I mean, it's insane. And we have much higher inflation. This should all be rebased against an inflation curve. It will take a lot of the sting out of this. This is technically terrible in terms of where it is now. If I go to the daily and I put that Head and Shoulder on there, I think you've had one of your best rallies in what will be a new bear market. You made our target on that Head and Shoulders. You rallied to the neckline. You're now back down. A Head and Shoulder is often a cyclical turn. Even though it generates a target, you often go 4, 5, 6, many sigmas below in downside. So in terms of markets, not holding equities, holding precious metals for an entire arcing from an old system to a new is the advisory, and getting off-grid and as self-reliant as possible for a much bigger event than everyone's ever prepared for that will surpass GFC, and the pain levels will be high. That's how they will get you to accept whatever's on offer, unfortunately. And you are talking about an end of major modern era cycle. And I'm sorry about that, but that could escalate into Taiwan. But don't be a leader. There's a chance to stand up and seize the opportunity. Leaders are born in, tough times. This is an opportunity. I'm going to focus on this. I'm going to understand this. I'm going to recognize my job might not exist. How will I earn? How will I add value? How will I prepare? What will I grow? Where's the space? How am I going to retain security for wife and children? And what other people can I cooperate with? Get local. We delocalized. This is what the internet did to us.
Yeah, absolutely. We've run out of time, I'm afraid, my friend. I'll have to get you back on again because there's so much more we can talk about. You've got a wealth of knowledge. If people want to find out more, they can go to marketsniper.com. You do have a subscription in there as well where they can learn more about your macro technical analysis and how it will potentially benefit people. But I think what Francis has just been talking about is metals will be the key as we transition from, as he said, the 2-track system onto the monorail. But for now, Francis, thank you so much for joining us back on Small Caps. We'll see you again very shortly.
Absolute pleasure. Thanks for having me on.